Hello everyone and welcome back to FinEd, your favorite financial education channel. Tax season can be a stressful time and many South Africans dread the idea of submitting their tax returns. But don't worry, today we're going to discuss how you can reduce your tax liability legally. Tax season started on the 15th of July 2024 and it ends on the 21st of October 2024 for non-provisional individual taxpayers and on the 20th of January 2025 for provisional individual taxpayers. Remember, the tips in this video may not be applicable to your specific situation, so please consult a tax professional to see which ones are right for you so that they can do the correct and most accurate calculations for you. Now, let's begin. First up, contributing towards a retirement fund. Contributions to retirement funds are tax deductible up to a limit of 27.5% of the greater of your taxable income or remuneration, capped at 350,000 Rand per year. This limit covers contributions to pension, provident, or retirement annuity funds. Your pension and provident fund contributions are usually deducted by your employer, but you can also top up your retirement savings by contributing to an RA fund yourself. This not only helps you save for the future, but also reduces your annual tax bill. Next, consider opening a tax-free savings account. This type of account allows you to invest in various financial products like unit trusts, bank savings accounts, fixed deposits, and bonds. The key benefit is that all returns, whether it's interest, dividends, and capital gains, are tax-free. There's an annual contribution limit of 36,000 Rand and a lifetime limit of 500,000 Rand. You can spread your annual contributions across multiple accounts, but you can't carry over any unused portion to the next year. Additionally, you can open a tax-free saving account for your minor children, although their contributions will count towards their limit. The tax-free growth, even on reinvested returns, makes this a powerful tool for saving. Donating to a SARS-registered public benefit organization or PBO is another great way to reduce your tax bill. Contributions to these organizations are tax deductible up to 10% of your taxable income. Any donations exceeding this limit can be carried forward to the next tax year. Just make sure to get a S18A tax certificate from the PBO to claim the deduction. Joining a medical aid scheme can also provide tax benefits. You receive a fixed monthly tax credit for contributions to a medical aid, 364 Rand for yourself, 364 Rand for your first dependent, and 246 Rand for each additional dependent. This credit reduces your tax liability directly. For example, if Tabor pays for medical aid for himself, his wife, and 3 children, he gets a tax credit of 1,466 Rand per month or 17,592 Rand per year. If the credit exceeds your tax liability, your liability will be nil, but you won't receive a refund for the difference. If you receive a travel allowance, keep a logbook to record your business mileage. This allows you to claim a travel deduction, which could reduce your taxable income. You can only claim this deduction if your travel allowance is next to source code 3701 or 3702 on your IRP5. Similarly, if you use a company car, keeping a logbook can help you claim a travel deduction. This can reduce your taxable income, but make sure the fringe benefit is next to source code 3802 or 3816 on your RIP5. Commission earners can deduct all commission-related expenses if their commission income, source code 3606, is more than 50% of their total remuneration, which is source code 3699. Keep records of your expenses such as telephone, stationery, and employee costs to take advantage of this deduction. Commission earners can also claim business travel if they keep a logbook. This deduction is allowed if your commission income is more than 50% of your total remuneration. If you receive a subsistence allowance for travel, you can claim against it for daily costs like meals and incidental costs. You can either claim for the actual costs or use the SARS deemed daily rate, which varies for local and international travel. For local travel, the 2024-2025 rates are 548 Rand for meals and incidentals and 169 Rand for incidentals only. International rates vary by country. Lastly, if you are self-employed, you can deduct business-related expenses against your income. Keep records of all expenses such as telephone bills, stationery, and employee costs to reduce your tax liability. And that's it for today's video on how to pay less tax legally. We hope you found these tips helpful. Remember, always consult with a tax professional to ensure you're making the best decisions for your situation. If you liked this video, give it a thumbs up and subscribe to our channel for more financial education content. Thanks for watching, and we'll see you in the next one.